Good morning, everyone. This is the weekend update for Saturday, May 16th. And actually, before I get started, Preakness Day today, I don't know if any of you guys actually bet the horses. I know some of you know I'm pretty active in that. I think Firing Line is a good bet today. So if you're looking to put a bet down, Firing Line, number 8 Firing Line is my bet in the big race today with American Pharoah and Dortmund and Mr. Z if you're looking to do one of those exotic bets with it. So anyway, let's get down to the market. Another record high on the S&P, the Dow just a hair underneath it. Of course, this came on the heels of more weak economic data. You know, it seems every other day we've got the Fed is increasing rates next month. No, they're increasing next year. No, they're increasing in September. And the market just continues to slowly move higher. And it's just an extremely narrow band of stocks moving up, which is what the frustrating thing about this market. Now, looking here at the Dow chart, you can see the big rally we've had over the last couple of days, right underneath the all-time high on the Dow. But, you know, check this out. This rally over the last 6 or 7 weeks, the volume's just been getting lower and lower and lower and lower as the market's getting ready to break out. Not a really bullish confirmation. Looking at the Dow Transports, which is something I've talked about a lot recently, the Dow Transports essentially led this rally from the get-go 4 or 5 years ago and has done absolutely nothing since December. It's actually been putting in, as you can see, lower highs and lower lows while we've had the Dow pushing out to new highs. Now, I know this is a new market. Things are different. You know, it's the new economy. Things are going to change. We've heard that so many times over the last 20 years, how the dot-coms were going to change, how the housing market was going to change, the new normal. And, you know, Dow theory, that an all-time high in the other indices should be confirmed by the Dow Transports. You don't hear anyone really talking about it. Although I will say what makes me hesitant and annoyed about this market needs a good ass whooping. We really haven't had a 20%. We haven't even had a 10% retrace in this market in a couple of years. You've got so many new traders in this market, the kind of traders that chase the robot stocks daily or bid Shake Shack up to ridiculous valuations. They have no idea what a real market retrace is. And when it comes, it's going to be brutal for them. They're not going to know what the hell hit them. But on that same note, it seems every other day over the last couple of weeks we've been reading in the business media about some analyst or some expert on TV talking about how the market is about to roll over and die. And you don't want to hear that. Big-ass retraces happen out of the blue and take everyone by surprise, and everyone's planting their flag in the ground right now regarding a retrace. So we may end up having to wait for one, although typically something comes up in June or July that kicks the crap out of the market and down we go. Be it dysfunction in Washington, we're going to have that Greece issue really raise its head in the next couple of weeks as well. So maybe that'll be the story that takes this market down for a little bit. Looking at the Dow Transport, while the market was pretty strong earlier in the week, the Dow Transports were not showing that strength. And then with the weakness we saw yesterday and the day before, the transports, of course, bounced. But we're well below. I mean, we are almost 5% underneath the highs on the Dow Trannies. And that is a big concern. Not a lot of people are talking about it, like I said, but that is a concern. And, you know, the new all-time highs we saw yesterday on the market came in the last hour of the day, like they do every single day when someone flips the switch and the buy robots come in just enough to paint us higher. Would go over the Russell chart, but, you know, why bother? These are the only two indices we're going to pay attention to right now. I am going to jump into our new big swing play, CIDM. There is so much bullish potential for this stock. I find myself having to contain myself. The chart is slowly inching higher. We got up to the 20-day exponential on Friday. Netflix. Let's pull up Netflix chart. Netflix, all I got to say is we should have exercised our options that we bought back here. Because we'd be up $220 just in a couple of months on those. But Netflix, another monster breakout on Friday, and the reason being they're looking to push into China. content, content, content. We're going to have Spotify on May 20th talking about their new video streaming service. And actually, if you've been watching the news, there's a lot of chatter out there that Spotify is going to end their free music service or limit it to 3 months. Apple, of course, has been putting a lot of pressure. Yeah, free market Apple has been putting pressure on the record studios to kind of kibosh what Spotify is doing ahead of them launching their own music service this year. So Spotify is going to be looking to differentiate themselves. And guess what CIDM does? They do narrowcast. And if you don't know what narrowcast is, it's really unique channels. And that is the next wave, like I said. Now, if you own CIDM and you have not gone to their website or checked out their launch that is really putting them on the map, ConTV, CONTV.com, the Comic-Con channel, really, I can't say enough good things about this stock. Like I said, they're still under a quiet period, so any news that does come out will be coming out from partners. So hopefully, like I think, Spotify lets them issue a press release if they are indeed involved, but it's right down their alley. Breakout, where will we see the chasers? You're already starting to see the Twitterati plant their flag in this stock so that when it does finally move, they can thump their chest. If it doesn't, you'll never hear from them again. And they'll get all the credit for finding this stock using all our research. It's just the way of the world right now. First target, 121. I'm not going to go over all the details again, but first target 121, the 50-day is right there. Secondary target is the 200-day, which is right now up in the 150s. This stock, like I said, was trading at $3 a year ago, and what all that's going on in the content sector. Look what one of our swing long plays, Stars, has done over the last few months. Boom! I mean, this is pushing 100% gain in the long-term account for us now. Content, content, content. And here we have Netflix, 40 billion market cap, Stars, Lionsgate, all these other with multi-billion-dollar market caps. And CIDM with 52,000 digital rights sitting here with a market cap under 100 million. Insane. But the market will play catch-up as it always does. I wanted to mention Lime earnings got delayed. So that's actually not a bad thing, especially if they're able to put out a press release maybe next week. But it looks like they just asked for an extension for 5 days. Not uncommon. So let's see what that one brings. We had a couple of plays on the Samsung release. It ended up that larger price stock was the one that actually performed the best. And it's actually flagging here. Keep an eye on this one this week on this little flag at the highs. Breakthrough 891, and we're looking for 925 and a rule of 10 play and a push to 10. So keep an eye on that one. LTRX didn't do a whole lot, but it didn't implode either. It's just it's a frustrating stock. They've got so many irons in the fire. One of them is finally going to catch on, and this stock's not going to look back. But it can be frustrating when it doesn't go when you're in. What continues to be prevalent in the market is, of course, the robot stocks. Mango was one of those robot stocks on Friday, and we actually got a nice little piece out of this one. What we've been seeing happening a lot on these robot stocks, and a robot stock essentially is a stock under 5, preferably even lower, that gets big time volume. Usually when they break 1 to 2 million volume, you know for sure the robots are involved. Early big pop on news, and this is a market that's news driven. It doesn't matter how friggin' stupid the news is. If it comes out in pre-market and the robots move in because there's volume, it's going to be in play all day long. And the stupider the news, it seems, the better. What usually happens is we have a big initial spike, pullback from profit takers, another push higher, and then a pullback and consolidation. This is actually when we jumped into this one in the chat room in the low 120s and ended up popping almost 25 cents for us going into the close. But this is this market right now. These robot stocks, no one really wants to jump into. Now, CIDM, back in a normal market, this stock would have already blown up. Not the case yet. But when the volume comes in and the robots get attracted, then everyone will have no problem at all chasing this stock 50%, 75% higher. It's just the nature of the beast right now. A couple of stocks to keep an eye on next week. FRO. Now, this one had a big move into the close yesterday. a lot of chatter about options, but really what's driving it is tanker rates. And it's another funny thing. There's just such a disconnect with common sense and logic in this market that you just have to go, who the hell is trading this market? Case in point, tanker rates are going through the roof right now for transporting oil. And the reason being, Saudi Arabia and Iraq are pumping so much oil right now that last week tanker rates got up 13%, which is a huge 1 week move because they are pumping like no other. Yet we have oil. Oil actually did finally. We'll look at the USO. Actually, here's the light sweet crude chart. It's just been going up, 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 up. All the while, we've got Saudi Arabia and Iraq and everyone else pumping the shit as much as they can. And still, we go up, 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 up and away. Tanker rates continue to go through the roof, which, you know, just further confirms that that's actually what happened. But anyway, Fro had a huge pump late last year from CMBS, and really on the same thing, tanker rates going through the roof. Keep an eye on this one this week. It's had a big move over the last couple of days, but breakthrough 290, you could be looking at a 20 plus. I mean, this is the kind of stock where you got to give it a lot of room. And, you know, I kind of talked about this in the chat room as well. This is a market where actually discipline really hurts you and hinders you, because some of the moves you see intraday on these stocks, a disciplined trader is not going to hold a stock for a 20-cent dip. But a new rookie moron trader who doesn't know any better, he has no problem doing that, and he's the one making the big money in this market right now. Won't last. Those guys will get washed out. It's a cycle that repeats over and over every few years. But this stock here, you'd be looking at 20 cents downside. But if the momentum continues to go into this one, you could be looking at 50, 60 cents potential upside, especially on this little MACD cross and breakthrough 50 on stochastics that we saw on Friday. Another stock to keep an eye on is McDonald's. I could go into the madness regarding Shake Shack's valuation right now. I mean, when you compare Shake Shack with its, 50, 60, 70 stores and the number of stores that Wendy's has and the market caps between the two of them, I can't wait till Shake Shack has options so I can buy some 2 or 3 year out leap puts and just sit on them and wait for the inevitable implosion that's probably going to come. But anyway, McDonald's, really hated stock over the last couple of years, but it's looking like it's trying to break out. Now, very rangeful stock. Goes up, puts a tailhead, ends up going down for about $4 or $5 each time. Getting tighter and tighter. Actually, I should have drawn it here. This is a symmetrical triangle. The breakout is 100. If you were to do that breakout, I would place my stops at 99. So $1 risk. And it would be a similar play as our rule of 100s. We'd be looking for 110, 115 on the play. But even looking at this action you're seeing on these candles, pretty volatile stock with a lot of volume, so it's pretty liquid. Maybe one for us to keep an eye on, see what the options do this next week, but just a large cap stock to throw out there for some options action. So that's it for the video, guys. Any questions, shoot me an email. Have an awesome weekend, and see you all in the chat on Monday. Bye.